Hello, everyone. This is Martin. Well, once again, let's ride the rocket ship up to the planet Forex. We're looking for trading opportunities for the week of February the 22nd to the 26th. And last week wasn't a terrific week for the US currency pairs. However, there were some other good opportunities, which I will show you in the review for last week. This week, though, I'm wondering what's happened? What the heck's happened to the US currency? I mean, it seems to be pretty weak against some of the other major pairs, and there doesn't seem to be much direction. The direction is without clarity at the moment. So until we get some breakouts for this week, the US currency pair is. Or the USD currency pairs are locked in a sideways kind of consolidation within some triangle patterns, and we're looking for some breakouts on some of the major pairs. So again, be careful. And I think this week we've got some good opportunities, especially to the downside on the Japanese cross pairs. So again, we're going to take a look at those opportunities as we get going onto this video. It'll be a little bit later toward the end there. So let's start off with the very first pair. So starting with the Euro USD daily, last week I said that we're in an uptrend continuation. As you can see, the previous couple of weeks, price went up and up and up, hit a resistance area right here, and then all of a sudden, with the start of the previous week, price just plummeted right down, and it even gapped lower and then just kept on going right down. And I did mention for last week, buy on a pullback. Now, the pullback never happened because this price was going down lower. We were expecting a bounce off of this support area right here. So if we would have seen one bullish candle reverse, when I say bullish, we're looking for a white candle. If we would have seen a white candle reverse and close above the 8 EMA right about there, then that would have been a signal that price was finished its counter trend move and would probably or most likely continue going higher. That never happened, and the next three candles went down, and finally we hit another support area. This time the 21 moving average right here, the 21 EMA, and a support area is highlighted with the gray rectangle. So um, we just didn't have a pullback opportunity for this week. We're going sideways. I'm going to say wait for a breakout. We're looking for price to either break either to the downside, which means closing below this 21 EMA and taking a sell trade on a breakout from here down, or waiting for price to break up higher again above this resistance area for price to go higher. Okay. Next pair, we've got the British Pound USD. And last week, I said that we have to wait for evidence. Last week we were right here. This red line designates the close of the previous Friday before the opening of last week. And the interesting thing was price right away on the Sunday Monday trading. You can see that right there with this black bearish candle. Now that's almost an engulfing candle, but most importantly, it did actually close below the 21 EMA. I would have taken right away a sell trade right there. And you would have taken it down all the way down for approximately 188 pips, okay? But so that was the one thing that you could have done. Now the other thing is, if you would have waited till the close of this candle here, and I mean this happened on a Sunday Monday, and if you didn't want to take a trade right away, but taken a I did mention in the video last week taking a breakout trade, see where the beginning of this red triangle, I'm sorry, this red arrow, okay, that's approximately the 143.37, 143.40 area, 143.40. If you would have taken a sell stop trade right there, you still would have made almost 100 pips. So you had some good opportunity. Now, I've also drawn on here. Um, the AB over here, and I've done this for a reason. If price is to go higher and you want to wait, again, for this week, we're waiting. We're waiting for a breakout, either above this trend line, this pink trend line, right from this point on. We're waiting for a breakout here, or waiting all the way above this resistance area, waiting for price to come up to here, then taking a buy stop order here, all the way up to the next resistance area. But I've drawn in the AB to show you a bit of a trick. If price is going to go higher, where does price most likely going to go? Well, we can do this. Let's just take this out for a second. Okay, we measure from A to B. Here's the low, swing low to the swing high. Price is coming back down to a fib area of of the 78 um, uh, retracement area right here. And so what we want to do is take this distance and then measure the same distance from A to B, from C, projecting it higher. So I'm just again going to grab this. You can see this is the same distance. This is A to B. And now I'm placing it where it is bounced off the support right at C, and you can see projecting it around here. So if price was to break this trend line and price was to break the upper resistance area, which by the way is the 2015 low, okay, right here, then price most likely will go all the way up to here to meet up with at least this 100 simple moving average, which is coming down. So as price is going sideways, this simple moving average is coming down a bit as well, okay? But that's only if price continues going higher. Price may come up higher and then bounce back and go back lower. Again, that's a wait and see. So for this week, we want to wait for the breakout, either at this area right here, the beginning of this green arrow, or at the beginning of this green arrow right there, okay? Now we get to the Australian USD, and this is where we now find the US currency pairs caught in a sideways movement between a triangle. So we've got the upper trend line here, a lower trend line. See price is going sideways. Last week I said wait for evidence. There was really no evidence. Price just kept going. Price really is, it's between the 50 and the 100 here, but in price, you can see the 21 is still below the 50. The 21 EMA has to rise above the 50 for us to even consider a buy trade. And where is that going to happen? Well, above the previous swing high. Take a look to your left. So the beginning of this green arrow, which is approximately the 72.25, 72.30 area. Once price gets up to here, it closes above there. We want to see a price closing above there. Then you can consider taking a buy trade to the upside. Or price may come down, break the lower trend line, and we can take a price has to close below the beginning of this red arrow for us to even consider taking a price to the downside. Okay, so the next one, New Zealand USD, exactly the same thing. See, we've got the triangle here, we've got the lower trend line, we've got the upper trend line. Price is going sideways. In this case, it's really, price is just caught between the 21 and the 50 moving average. So if price is anywhere in this area, it's really no man's land. Price is not going anywhere, and we really got to wait for evidence. That's what I said last week. Wait for evidence. There was no evidence for any trade, so just forget about that. This week, we're again looking for a breakout of the triangle, either waiting for price to close above here, above this green arrow, or price to close below the red arrow for us to consider taking a trade in either direction. USCAD, um, last week I said wait for evidence. It was the same thing. Uh, there was really no trade to be taken here. I mean, here, if you see, we had an engulfing candle to the downside, but this came right at it closed right at a support area that you can see with the gray rectangle. You would not have taken any trade. Also, I had drawn for you a long-term trend line. So the long-term trend line, you can see the dashed line, the 100 SMA. So with the 100 SMA, the long-term trend line, the gray rectangle, I mean, there's enough evidence and clues to show you that this is a major support area. Also, look to price to the left here, and we had a swing low, price bounced up. So again, indication that this was a major support area. When you're looking for price to break out to one side or the other, in this case to the downside, you have to wait for price to close below this area of confluence. And if you're a very conservative trader, what you want to do is wait for price I'll do something for you. We want to wait for price to go lower. Then we want price to come back higher, like that. Test again once the support has been broken. We want price to come back to test the support and then wait for evidence uh, to the downside for us to take a trade to the downside. That's how you basically play a breakout. That's a conservative breakout play, but it's going to help you in the long term because sometimes they're what is known as false breakouts. Price has to close below the 100 SMA, below the trend line, well below by at least 30, 40 pips for us to even consider a trade going to the downside. Okay, again for this week, we're in a weak downtrend. Price seems to be going up a little bit higher, but if oil, remember this currency pair is tied into the price of oil. If oil is strengthening, then U.S. currency will get weaker against the Canadian dollar, or in reverse, Canadian dollar gets stronger against the U.S. currency, making this currency pair go down. So we're in a weak downtrend. Wait for further evidence. Okay. Here's a quick look at the oil chart. You can see oil is really trending slightly downwards, long-term trending downwards between a wedge here. However, price has gone up quite a bit. It's testing the trend line. It's testing the 50 moving average. So will price continue going a little bit higher or lower? We don't know. Again, you can always trade oil, but you want to do, in this case, you want to wait for price to go higher from this point on, where you see the green arrow, or for price to come back lower, starting at from this red arrow here. Okay, and again, you can trade just like any other currency pair. Again, you would just right-click on the chart. Let's do that right there. Trading, new order. Okay, you can see the new order. And there, sell by, you can take a sell by market, buy by market, make sure you pick the volume. And again, is it a pending order or market execution at the precise moment, or a pending order for the future? If it's pending, then okay, it's pending. Then you would choose either buy limit, sell limit, buy stop, sell stop, depending on which direction that you're going. Okay, so like I said, you can always just trade just like in a similar fashion to the other currency pairs. That's another option for you. You can always trade the oil. Okay. Now we're going to move on to the US Swiss franc. And last week I said we're in a downtrend, but caution, okay? Because last week, look at that. Previous week we went down, 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 all the way up to the 200. This is the 200 SMA, which is a very strong line of defense. It's one of the strongest institutional moving averages that large institutions use, and especially on the daily chart, which this is. So price went down and bounced right up, and now it's bounced right back down off the 50. So you can see price right now is caught again between the 8, caught in between the 50. Although price has bounced down, which means, and this is important, the 8 is below the 21. The 21 is below the 50. However, you see this dash line? That's the 100 SMA. And for price to be really in harmony and to really, I mean, for the very conservative traders, you would want really to see that the 100 SMA is above the 50. So 100 is here, 50 here, 21, and then 8. for you to take a sell trade to the downside. However, I believe price may end up going down further. So, are we in a downtrend continuation? Well, again, the theme of this week is what's happened to the U.S. currency. U.S. currency seems to be not showing its hand, seems to be weak against some of the other, against a lot of the other major currency pairs. So, if that's the case, and we believe that the U.S. currency is not that strong right now, then you could be in a position to take a sell trade. However, there's two things you can do. Take a sell trade from this red arrow, and that is the 98.78. So you want to see a close. Well, you can take a position around 98.70 if you want a sell trade. Your stop loss would be very narrow, just above the high of this previous candle, right about there. So if your stop loss is right there, above the wick of this black candle, and that is, let's just take a look, see how we would do that. So the stop loss is approximately 86, 87 pairs, pips, I should say. And if you're taking a sell trade, you want to go minimum 1-to-1, 87. So see, right there's about 87. So that would be your first target. However, most likely, if it's going to go down, it's going to go down all the way to the 200 SMA, which would make this a great trade opportunity. Okay, so if price breaks below this 8 and closes, and that's the important thing, closes below the 8 EMA, then price most likely is going to come all the way down to retest the previous low, but at least up to the 200 SMA. Okay, and if price continue and breaks the 200 SMA, then I've drawn in for you the long-term trend line. You can see with this blue line right here, this is the long-term trend line, which means price then, if it breaks below this area, price will most likely then come all the way down to here for another 160 pips or so. Okay. Last week I said downtrend caution, sell on a pullback. There was no opportunity for a pullback. What did we mean by that? Well, we were here at the close of the previous Friday. The Sunday, Monday trading session was a um, huge bullish candle. However, you could have played a counter trend, knowing that there's a bounce here. Here's a doji. Here's a bullish engulfing candle. If you would have entered right there, that would have been good for some pretty amazing pips, at least for 102, letting it ride for at least 167. So that would have been a great counter trend trade. And I can't remember what I said in my video last week. I should have reviewed that before doing this tape, but I might have mentioned a counter trend. I'm not too sure. But again, there was no pullback evidence. There is right now. Here's the evidence where price has gone up. See, this is called a pullback. Price is pulling after a downtrend. Price is pulling all the way back. The first major defense is really the 21. It's also pulled away back and down from the 50 with this black engulfing candle. So that's giving me indication that price is going to keep coming down lower. And again, depends on if you're an aggressive or conservative trader. Conservative trader would take a sell stop somewhere right below the 8 EMA, somewhere like I said, where the red arrow is. An aggressive trader would take a sell trade immediately, or maybe wait for a slight pullback, just a wee slight pullback, maybe 20, 30 pips or so, with a tight stop loss just above the wick here. Okay. Next, we've got the USJPY. Now, this was great for making some really good pips. You could have made, in fact, close to 300 pips on this one, two ways. Last week I said we were in a downtrend. Okay, so last week we were down, 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 down. However, on the close of the previous Friday, we had a beautiful reversal white bullish candle, and getting immediately right there, that would have given you the about 127 pips right to there. Okay, 127 pips. Now, the other thing I said is last week, counter trend, wait for counter trend. Okay, I'm sorry, wait for a pullback. I'm sorry, that's the counter trend. Okay, so I did tell you to take the counter trend. I also said wait for the pullback, and if you would have waited here, we're waiting for a pullback. What does that mean? Well, price is going higher, 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 and we're looking for price to not close above the 8, but we're looking for price to, well, actually can close above the 8, can close really anywhere, but we're looking for a pullback, for a bounce back down, giving us evidence to the downside. Here, price closed below the 8, and then price with the next black candle bounced right off the 8 and closed below the 8. So price never did go above the 8, telling us, giving us a good clue that price was going to continue going down lower. The next day we had a doji, and again, if you would have gotten in right there at the close of this black candle, which was the Tuesday, then you would have made some really good pips, and yes, you would have made 160 pips on the pullback. So you would have made pips going on a counter trend, 127 pips, and then pullback, bounce to the downside, another 160 pips for a total of close to 300. Now, I want to show you one more thing. I'm going to switch this daily chart to a 4-hour chart, okay? Now, this is the end of the previous Friday. Again, we're saying waiting for a pullback, so waiting for price to go up higher and then bounce down, okay? And this is what we're talking about. If you are looking at the 4-hour chart for better entries, sometimes you do get better entries. Here, price is going higher, higher, higher. So far, there's no pullback. Price breaks the 21 moving average. And again, we're waiting. Remember, we're waiting for one good black bearish candle to the downside. We don't see it yet. Price keeps going higher, and all of a sudden, price bounces off the 50. Now, right now, these are very small, weak candles. The bulls are in control here. The sellers are holding the line of defense here at the 50. And finally, the sellers bring price right down. But notice it didn't break down with conviction below the 21. I mean, this again was not a long enough candle. So I would not have entered any trade just yet. Again, we went sideways, 1, 2, 3, 4, 5 candles, really small, tiny candles. You can look at the MACD below, right at the zero line. Again, I would not get into any trade right there, okay? But then price goes up again, wants to test the 50 moving average, which is coming down, which means the sellers are pressing for price to come down lower. The 50 is below the 100, which is good. And right now, the 21 is still below the 50. But see, price is still going kind of sideways. MACD, not much of a clue there. But all of a sudden, we get this one black, bearish, engulfing candle. You see, this candle it completely engulfs the previous little candle right there. Okay, and I would have gotten in right at the open, right there, or I'm sorry, right at the close of this candle right there on the 4-hour chart, and it would not have made you as many pips as if you were trading a daily, but you would have still made about 103 pips. So if you're playing off of a smaller time frame chart, that's what you're looking for. Again, you're looking for the same clues as if you are trading on the larger time frame. Again, this is the larger time frame. There's less whipsaw, and that's why a lot of good traders they enjoy trading off the larger time frames. Now we're going to get into the Canadian Japanese dollar, and this is where we're looking at the counter trends. I think there's some great opportunities ahead for the Japanese crosses. And again, we can take a look here. We're in a downtrend still. Sell on pullback, so you can wait for price to come back just a wee bit higher to about there, or take a sell stop or just below the wick of this candle. If you catch a trade right there, that is good for Oh, I'm sorry, that is good for at least about 173 pips, which is pretty darn good. Okay, so I think there's good room for the downside. The MACD is below zero. So again, conservative traders, what you would do is wait for a slight pullback and then look for evidence to the downside, take a sell trade. Aggressive trader would take a trade either right now, okay, with the start of the Sunday, Monday session, um, and your stop loss will be just above. You see this candle? See this black candle? So your stop loss would be just right there at 82, 60, 65, 66, just above the high of this candle. So if that's your stop loss, let's take a look. If you're getting in right now and this is your stop loss, so you got approximately 89 pip stop loss, a one-to-one target is at least right there, okay, right there. However, there's room for price to go down further, and almost good for a 2-to-1. What that means is 1 unit of risk, which is 89 pips, and almost 200 pips profit for the taking, if the trade works out your way. Okay, so that's how to play that. And let's take a look at another Japanese cross pair. We're looking at the GJ, and remember, I think in last week's video I said this pair moves quite a bit. I mean, each candle moves quite a bit. It's a huge mover. Last week I mentioned we were in a downtrend, wait for a pullback. Perfectly, because I had drawn in this line right here where the pullback area was, right here at the close of Friday, of the previous Friday. Um, the pullback, what that means is price went higher, okay, and then it was rejected off the 8 with this engulfing candle right there. You can see that this the engulfing candle getting in at the close there, and would have made you right now at least 120 20 pips, okay. This is also a good opportunity for a counter trend, but again, if you're just playing the pullback, waiting for a pullback, which might have been your better opportunity, and I'll explain why. Take a look at the moving averages now, okay? Here we have the 8, okay? You can see that right there. Here we have the 21, and here we have the 50. And here we have the 100 SMA. So you can see all the moving averages are in harmony. The 8 is below the 21 below the 50, 50 is below the 100. But do you see something else? As price is moving to the right side here, as price is moving from here to here, the space between the moving averages is getting wider, wider, wider. See, the space here between the 21 and the 50 is staying about the same. The slope is somewhere between the 4 and 6 o'clock on the clock position there between the 4 and 6 position. Okay, so the trend is continuing to the downside. The space between the moving averages is getting wider and wider, wider, and I believe this price is going to continue going down. How far down? Well, I've drawn in this horizontal line, and that is approximately the 156 30 area, 156.30, okay, or 156. Price here with this previous low has already broken the other previous low before that. You see that right here? So with this low, it's broken the previous low, which is giving me an indication that price is still going to keep coming down. Now, price may come up a bit first and then back down, but I believe we're in a downtrend continuation. The MACD is below zero. Okay, and our last pair, we've got the Australian Japanese yen. Again, it's the last Japanese cross pair I want to talk about. Here you can see, again, sell on a pullback. I believe price is going to be heading down at least to retest the previous low here. And I've got another horizontal line right there. And if price breaks the previous low here, price is going to come down to somewhere the 75 50 area, 75, 80 area. Okay. Last week we were in a downtrend, sell on a pullback. Okay, and um, sell on a pullback, you would have made 159 pips. So I'm sorry, that was the counter trend buy trade. We're in 60. Okay, I've got this reversed. Um, I've said the counter trend buy, but that's not, so we got to reverse that. So 60 pips so far. If you would have, let's take a look at this counter trend. If you would have taken a counter trend right here at the open or at the close of this candle right here, right from here, you would have gotten out somewhere around there, and that was good for 159 pips. Okay. However, waiting for a bounce off these 21, you would not have gotten in here. I'll tell you why. Because I would have opened up the trade. See, this is not an engulfing candle. This is just a small little reversal on this white bullish. If anything, you would have taken a sell stop order just below this the wick of this black candle. So somewhere down here, you would not have gotten in. However, the next candle went up. However, take a look. This next candle is an engulfing candle. See this black candle right there? Okay, that engulfs the previous white candle that also closed below the 8. I would have gotten in right there, and you still would be in the trade right now, maybe without closing it if you didn't close it on Friday, but that would have been good for 60 pips. So going up, that was good for 159 pips, and going down, good for 60 pips. So um, let me just take that out of the way, and okay, sorry. What I should do is just change that to a pullback. Hang on for a second. So on the proper pullback, there we go. That's good for 60 pips so far. And on the counter trend going up, counter trend means we're in the downtrend here. Counter trend means trading against the downtrend, and that would have been good for 160 pips. Okay, so that's what we see. This is the last pair for this week, and happy trading. Um, Again, looking forward to your emails and questions, and I will get back to. I know a lot of you have sent me emails recently. I will get back to all of you very shortly. So take care, be careful, and happy trading. We'll talk to you again soon. Bye bye.